institutional quality. This video is basically about how the institutional quality will be affecting financial markets this year. And a simple question will say, well, a simple answer to this question is that there is no answer. So that we don't necessarily know how the changes in institutional quality, such in the United States, will be affecting the financial markets. On the one hand, there is a general agreement that the higher the quality of the institutions, the more. A simple answer to this question is that there is no answer. So that we don't necessarily know how confidence there is in the investor community in the country, so that if there is a perceived decrease in the quality of the institutions in a given country, this will likely lead to higher costs of borrowing, such as for the United States, and also a higher demand for alternatives on the national, well, essentially investor circuit, and we could think about alternative, asset classes. So we could think about Eurozone becoming more attractive. We can think about Asia becoming more attractive also because it is more stable. Europe is still institutionally very strong, and gold could be one of those commodities which will be well attracting long-term interest due to its relative insulation, on the one hand. And then on the other hand, I would argue that we don't necessarily know how the transitions, which could be arguably occurring in the West, and mostly, and let's say most specifically in the United States, will be affecting in the long term or in the short term the financial market in the United States in particular, and also global response to that. Since one could be seeing a transition of sorts in the United States from one set of rules, from one set of institutional parameters, to another set of rules and institutional configurations. And that may not necessarily be bad in its own right, as there is a lot of turbulence, there is a lot of change, but well, at least based on what the officials are saying, those who are right now in charge, it is not the intention to lower the quality of the institutions that she governs them, but their desire to bring about a radical change. And then one can always argue that what is change for one set of actors is probably very destructive to another set of actors. So we could be let's say here in the news cycle, in the social media, a lot of very different points of view. But then, in terms of whether, let's say, social science can give us a more nuanced sense of where that leads, I'm not sure that the answer is that simple, since we cannot really assume that only the quality of the institutions is that sole factor which actually will be affecting financial markets or investment approaches or strategies. I would say that it will still depend on where the capital is being accumulated, where the opportunities for investment still be. It will still be important to think about where the most dynamic economies are. And I think that while on the one hand what is going on in the United States right now is very unusual and disrupting, on the other hand, there has been a growing need over the last 30 years to turn the page, especially after the end of the Cold War. There has been a sense, I would say that there's been like the autopilot in the West in terms of some assumptions, some discourse, and I think that in some ways Fukuyama's essay on the end of history has been proven wrong, but also right in many respects, given that the discourse, given that it's, let's say, the institutional setup in the United States and in the West stayed largely the same. When the world has changed very rapidly and very significantly, and I think that it is not necessarily a bad thing when a country on the scale of the United States opens up a discussion on where it goes, what it should be doing, etc., etc. In other words, in one indicator there is a growing debt in the United States, and everyone says, okay, it is one of the major financial markets, it is one of the more important economies in the world, and it can afford that those amounts of debt. But I think that one cannot really disregard the effects of that on the real economy, on the economy in terms of the shop floor, in terms of the industries leaving the country, going to where it is cheaper to do economic activity, and there is a growing sense, at least among some policymakers, among some thinkers in terms of economy and economic policy, that these things can be done differently. And I think that the institutional quality in itself is not necessarily, how shall I put it, end all and be all. And I think that if the macro conditions are changing rapidly, especially in terms of international trade or competition or whatnot, or leadership in the world, then that could have its independent effect on the outcomes. And I think that at the end of the day, investment is always about outcomes. And I think that what that means that even though there is an incredible concern and a lot of loud rhetoric about what is going on in certain countries, what is going on in terms of international trade and tariffs, etc., etc. But I think that at the end of the day, a lot of actors which are in the game have skin in the game, and they would want to maybe continue doing the same thing on a reconfigured basis. And I think this is probably the ultimate, let's say, aim, and that could be also applied to the institutional setups in the United States. And once again, we should not forget the example of essentially Twitter after it was acquired by Elon Musk, and that the company has continued operating, and the company has continued generating value, albeit under a different heading, with a different branding, etc., etc. So that I think that a lot of these will be involving a lot of learning, institutional learning, international learning, and also a reset. There is a reset, there is a turbulence on the market, and I think that one should be learning on the go, and just being very specific about the industry, very specific about what one can assume based on the extant knowledge, etc., etc. So that I would say that there is no single point of view which will be of relevance, but there could be many different ones which could be equally valid about the impact of the institutional quality on the financial movements. And I think there will be, but that won't be the only variable. So that I would say there will be other variables in place, such as opportunities, such as the availability of capital, such as where the innovation occurs. And I think that will be those issues that will be affecting the general conversation of experts. And one can also think about, let's say, maybe not necessarily democratic countries actually doing great work in terms of institutional quality, in terms of economic growth and development, such as Singapore, such as other countries. In other words, I think that there will be more appreciation to shades of gray in terms of the overall setup, institution-wise, and there will have to be an understanding that things will be changing one way or another, and I think that also could be beyond the grasp or impact of individual countries or individual politicians or institutions even, and I think that will be something to observe and to analyze over time.